Okay, Lyn Alden, founder of Lyn Alden Investment Strategy, is now joining in. Thank you very much for joining in, Lyn. Um, should we read too much into perhaps, once again, thawing of the relations between India and US, the phone call made by Prime Minister Modi to, President Trump, and even the statements coming out from the US Treasury Secretary saying that India will rebalance away from Russian oil towards US oil. Now, that sounds material, and it will be a big shift in India's energy security policy, a pivot there. I mean, how would you read these statements?
Yeah, it's a good question. So far, the history that we've seen throughout this year is that optical wins have generally been more important than substantive wins. So sometimes an agreement can be reached long before any material changes are made. So it's possible that they could come to an understanding, make markets more complacent, score political wins at home here in the U.S. from the U.S. perspective. But then when we look back at this 6 months from now, there might actually be less material changes in Indian energy policy than are originally advertised. That's, I think, probably my base case going forward. So I view it as it's always good to see thawing of relations, but I'm still skeptical that there's going to be major, large-scale changes in Indian energy policy based around this.
Right. Given all that has taken place overnight and over the last few days in the global markets, where a lot of money has gone to commodities, do you believe that it'll at some point continue to do so, or maybe there is profit booking in metals and that finds its way back to equities? What should one assume from here on?
Yeah, so I have two different time frames in mind for commodities, and particularly precious metals, where there's been a lot of focus lately. So I do think that when we look at the very long term, like let's say the next 5 years, I do think that metals have longer to run here. I think that we're in the midst of a very strong structural change in global reserve policy and a change in the US dollar overall. I do think it's ahead of itself currently. So my base case, and I'm not focusing on the very near term, that's more of a trader's call, but I do think that we're due in the coming months for probably a substantial pullback or correction. But I'd be a buyer once that clears up some of the excess. If you look at major like equity U.S. indices compared to gold, they've rolled over in gold terms. They're still fairly elevated. I think when we look back at, say, 2030, gold could be an outperformer. I just think it's ahead of itself in, say, a 6-month period.
Any thoughts on, Lyn, did you have a view on silver as well? Morning.
Yeah, so we're seeing a catch up in silver and platinum, which I think it's healthy to see a broadening of the precious metals market. I think that they probably still have a little bit room to run here. But as we get a couple months more into this, I think they'll be similarly overbought, just like gold is. They've obviously been more explosive in the near term, kind of the back half of this year. And again, I think 5 years from now, I think they'll probably be north of where they are now. But I do think that traders should at least start getting cautious at these levels and consider some profit taking or consider rebalancing to some degree, even if the long-term fundamentals are still attractive.
Okay, shorter conversation than usual, Lyn. Thank you very much for joining us. Good speaking with you here on CNBC TV 18. Appreciate it.